Hey, how's it going, guys? Welcome back to a new video, and in this video we are going to be dealing with my backtesting process and what I basically do every day I get on the charts, or if there's nothing really to trade, or if it's the weekend and I'm just waiting for the webinar to start, or if I'm not talking with a student, just during my free time, what do I do on the charts? And the reason I do this, by the way, is to build confidence in what I do and to continue understanding that what I do is going to pan off and play out in the long term. So the first thing I do is I usually go to EU or some other currency pair. In this case, we'll do something I don't really ever look at. So we'll go like GN. Sure, do I have anything on here? I don't. Okay. So then we'll submerge this price right here, and we'll just go to the left until we're pretty much happy with where we are, and we'll click randomly. Sorry, I was drinking something earlier. So I think we're good. Just random, right? Is this some day in the past? 19th of July? Okay, yeah, we are in the past. Okay, fantastic. So I'll go some more in the past, and I'll ultimately work my way down, just basically gauging where I am in price and working through it. So very quickly upon looking at this, I know we're clearly in a consolidation of some sorts, right? With the most recent grab of liquidity being this low right here, and this supply and demand zone left behind right here, right? And as it came to trade higher, we of course left behind the inefficiency, thereby leaving an area that price wants to fulfill, as there is money that is sitting pretty much untapped in there. So price is right now fulfilling that, and it's fulfilling that with very, very efficient price action. So more likely than not, it's probably going to continue dropping to the downside, even though I'd want to look for a buy here. However, at the very top, we do have the equal highs. So we're probably going to see something along the lines of this or along the lines of this. And we're going to work with that in a second, but we don't really care about that too much because that's the daily time frame, and there's a lot we can do on a lower time frame now. So just taking a look at this very quickly, we ran the sell stops here, begun to run the buy stops, ran the buy stops, and it looks like, yeah, we did not run the buy stops up here, got up into this area right up here, and since then have just traded lower. So I do think we are still very bullish on this. So as a result, we're going to look for bullish plays. Now I'm not going to mark anything on this higher time frame because there's really no need. To get your own mind thinking about it, you can mark some like lows and see that this was a liquidity grab, and see that this liquidity right here, or this inefficiency, was just fulfilled, right? And it's fulfilling it really aggressively. That's really nice. But ultimately you can see that we're starting to form all this liquidity above the highs, and as you all understand, above any high really, and even on the lower time frames, all these swing highs are ultimately points of just straight up liquidity, right? So we're going to go over to the 4 hours, take a look at what we have here. Clearly, we shifted bearish. The momentum is bearish to the downside. You can see this very bearish momentum. However, we have to recognize this bearish momentum was only holding until it fulfilled whatever S&D zones we had in these areas down here. And you can see we just wicked into this last S&D zone, a little bit more of a refined zone right there, with the inefficiency here. So we did come to fulfill some of that inefficiency right there, created some liquidity, ran the lows, and are now kind of just stuck in this range. So if I see some displacement on a lower time frame, I'm willing to take that to the top side to start targeting at least this high right here. So what I'm going to do is I'm going to place a line right here. I'm going to place a line right here, just showing myself where the long-term liquidity points that I want to target are, because ultimately I believe that price will want to make a reach out for these points, right? I don't really need this anymore because we see that the mitigation has already happened and we're getting some kind of movement up, but now we're going to go and take a look at the type of displacement there was here. Now what I'm going to do is I'm going to keep taking trades until I basically get a win, just for the sake of the video. If I don't get a win and it's been like a while, it is what it is. It happens, but ultimately that's what I'm going to try to do. So just taking a look at this, we can see that there's clearly a displacement to the top side. And I mean, already this is pretty viable for a buy. And if we take a look at this, we can see that here, efficiency wise, price was very efficient and then stopped being efficient right here. So ultimately, what I'd pretty much be looking for if we were long-term trading is something along the lines of this. Now, I myself don't enter trades just like this, right? And then this would be the overall target. What I'd do is I'd reconfirm these points here. However, we are not going to do that right now because the way we confirm and the type of confirmations we have is something I keep to the private mentorship, and I go in depth with that. So instead, we're going to look for this overall swing. Nothing crazy, right? This is just an hourly chart. I actually don't take any hourly trades myself ever. Instead, I'm always on the 15 and 5-second trades. But this is an example of what we do and how you can do what we do without needing to use the much lower time frame. So we're going to look for that tap in. Oh my God, if we don't get this, no way. Okay, so we do get tapped in, and ultimately now what I'm going to look for is if price wants to start going higher, we're pretty much going to break even at these points here. Why? Because that's where structure is now holding, right? Otherwise, it's going to go right through, and then we'll have to do nothing there. Okay, so price does get above there, and you can see that it did that from this point here. So at that point, I'll actually be happy with locking this in at break even. No way, this might actually be a win just straight off the bat. That's really lucky. But this is how I basically backtest before a day starts. It's only 10:30 a.m. right now on a Sunday. We have the live webinar, which you can access if you want to by joining the private mentorship below, and we will be talking over some really interesting entry criteria today, and that will be recorded for those of you that don't join ASAP. So we're gonna lock in pretty much right here. We can lock in a little bit higher just to make sure we're accounting for commissions, because even though it's an hourly time frame, there's still going to be commissions in this trade, which means if we lock in our stop loss at this point right here, we're ultimately locking in the commissions as well as break even. So we'll assume that this right here is break even. Now what we're going to do is we're going to look for our first partial at this point here. As I said, we're going to go for a partial of 50% right here of the overall position. Hopefully I can actually find wherever it says that. We'll make it black, put it in the middle center. There we go. Yep. Actually, we'll just put on the very left so it doesn't get in the way. There we go. So yeah, we'll look for the partial at the 50% right here. As we understand, right above it lies a shit ton of liquidity, and ultimately if price came above here and then distributed, it would make a lot of sense to do that, because smart money basically would be collecting all the orders here and continuing whatever bearish move is applicable from that location, right? But right now we're still overall bullish because of those higher time frames, and we're going to look for it to continue delivering to the highs, which you'll also remember is part of these equal highs. So you can see that just by using this liquidity, we understand that it's also targeting this liquidity, but more intermediary, this is the most important move right here. That's why I'm looking for this overall 1 to 6. Right now, again, if we confirm this or reconfirm this, this was clearly a much higher RR trade potential. There'd probably actually be some -1s inside of here, and then this could have already been up, let's say plus 60. But this is a talk for another time, and this is a refinement that we're not going to talk about right now, because it's really hard to just get across on public YouTube. So we're gonna let this play out now. Hopefully we don't come to break even. Okay, so we actually come right back down to break even. Perfect. So now it doesn't look like I just fully, you know, made this all up. But then we have a break-even trade right there. And ultimately, what we also have to recognize is that it's still very likely that it's going to go higher. But the fact we came all the way back down here keeps me out of the trade now. And in this case, I'm not going to look for anything right here. Instead, what I'm going to do is if prices choose to again displace on a lower time frame from this S&D zone, which again, you can see has basically the same flavor. We have the break of structure followed by the S&D zone, followed by the imbalance laying inside of it, thereby having money that needs to be tapped into, that's being tapped right now. So basically on a lower time frame, if we do get that displacement, we'll look to take that to the top side again in the form of those liquidity points. So we'll get down to a 5-minute now, and we'll start watching this just to see if it wants to hold on to this point. We do clearly have that displacement. So what I'm going to do here is, because we're on a lower time frame, I'm just going to look to market buy this down candle right here. Just like that, have the stop loss right below that low, as so, and look to target that high right there again, with the partial still being here. However, what I'm gonna do is, as prices come to make a new high, if they do, I'll be locking in whatever lows are created until we have a move that basically puts us in profit, and then I'll leave it to run to the first partial. So again, same thing goes. We're gonna just let this run now. Okay, perfect. We run to that -1, no issue. And this is gonna be the importance of understanding how a system doesn't always have to be the best. So we'll look for one more displacement. If we do get that displacement, we're going to reduce risk on this overall, right? So what we're going to do is we're going to say this is a break even. This was a -1%, right? So we're going to be risking 1% per trade, and we're going to look for one more displacement now. So we do get a bit of a displacement, but it's not large enough. Instead, it's just kind of playing in these areas. We'll look for that move back up through the highs. Maybe we'll actually be okay with seeing a little move like this, right? And then if it displaces, I'll still be happy with taking a buy there, because we understand that the supply and demand zone. Okay, so that's nice. Now we're looking for the displacement upwards. Still kind of holding on, nothing really crazy. Okay, that's the last down move I'll permit, basically. I don't really want to see it come lower than that. And now I want to see it take off, basically. Okay, so it looks like it's starting to do that. Let's see how this area right here reacts. This is just the high of this range right here. So I'm looking for that range to have displacement to the top side. So we do have a little bit of displacement. That's really nice. So what I'll do is I'll actually look for one more buy here, right? And what I'm going to do is I'm going to have this right below this. Actually, structurally, yeah, I have it right below this. And similarly, I'll be looking to target the very high right here. So again, this is already how we work through our time frames. But what I'm going to do to this trade is, because we've had the break even here and because we have the loss here, I'm going to actually risk 0.5% on this trade overall. Thereby, if I'm still on the wrong side of the direction, my risk is already reduced, and the maximum I'll take on this day, or however long this has been, is minus 1.5%, which is crucial to understand, because in the future, when you hit these 14s, these 15s, the 16s, then you understand how quickly this basically makes up for the losses, right? So we're going to put 0.5% on this. So again, what we're going to do is we're going to assume a lock-in of minus 0.5%. Otherwise, we are going to look to take this to the top side now. Yep, we're going to look to take this to the top side. And what we're going to do is we're going to, again, break even with structure. So we're going to let this play out. Okay, so we do get that push up, but we still don't have a reason to break even yet. It might just come right back down. So it does. Wait, let me make sure this isn't okay. Yeah, okay, so that does count as a minus 0.5. Perfect. We'll leave that minus 0.5 on there. And now, instead of continuing the forced trades, what we're going to do is we're going to zoom back out and take a look at where we are in this overall market, right? And what we can instantly see from the market we're on is we are clearly displacing to the downside now, right? And as we're doing that, if we go to even a higher time frame or even a higher one than that, you can see that we're still stuck in this overall range, and ultimately it still makes sense to continue delivering to the top side and keep clearing this liquidity. So we're not fully done with the trades we're overall looking at right now. So we'll let it play out on a 15-minute for now. There we go, testing the backside of this range and just dropping off. Still very bearish, looking for that bullish displacement. So we kind of have a bullish displacement there. It's very minor. We'll look for one more. Yep, so we don't really have anything there. Still kind of just looking for that. I still want to see buys just because we're still in the buy ranges, right? And we do kind of displace the top side here. It's very, very trickly though. You see how this is not impulsive. So I don't really mind it too much. I'm just looking, and I'm starting to like this a lot. So what I'm going to do is I'm going to look for another buy at market price right here. Stop loss right below the low, and looking to again take it to the top side over here. Now, because we've been trying to get into buys and we've clearly had one break even, one failure, and two failures, we are again going to look to risk our 0.5%. So we're going to lock in a straight up minus 0.5% on this overall. So again, our overall risk on all the trades we've taken so far will be locked in at minus 2% total for the day or for the last week, right? So we're gonna let this start playing out, and we're not gonna break even just yet. We're gonna look to break even with structure again. So now price is clearly structurally displacing. What we're gonna do is we're gonna lock in this low right here, allowing ourselves to lock in again just a little bit of profit there to make sure we account for commissions, okay? And what we're gonna do is, again, we're gonna partial 50% up here and 100% all the way up there. So let's let this play out now and see if we get back up there. So we don't come back to break even, which is fantastic. That's always good. Oh, and we come right back down to break even. So that's a lot of how trading looks like sometimes. So we take the break even on that, put that to the left, and again, we're back to waiting. Now notice how we basically have to forego taking all this profit right here, right? All because we understand that in our specific entry criteria, we want to see liquidity ran. I will never look to emotionally take price here. Now, on a $100,000 account or $500,000 account or very large accounts, this is a lot of profit that you just gave up. But what you have to realize is that if you don't stick to this, but you stick to taking these losses, eventually these losses are going to eat way into all your wins, because what's going to happen is when these wins run, those are easily going to take care of all these losses. But if you don't let these wins run and start to emotionally exit in these areas here, you're going to lose over long term, right? So we're going to keep watching this. We're going to go back up to a little bit of a higher time frame, just work around what we're doing here. Again, I still think we're pretty bullish, so we're going to let it play out. Comes right back down, looking for bullish displacement one more time. Ultimately, nothing really too crazy, still very bearish. Starting to get some kind of bullish displacement. Look at a 15-minute here. Testing the back end of these ranges, really leaving behind some supply and demand zones in here that we could come right back down for. We're going to watch those. We do displace again to the top side. So what we're going to do here is we're just going to look to take this buy right there. And again, we're going to be risking 0.5% because we understand overall that, you know, we've been on the wrong side of the market multiple times. So there's no point to risk more, right, to keep on trying to get the wrong side of the market. Instead, if we're wrong, we're just going to basically get out, right? So we're going to let this play out now. Okay, not going to break even just yet. Okay, that's fine. We'll take the minus 0.5 on that. And again, we're going to look for it one more time. Why? Because price is still clearly in a bullish structure. Okay, so we're coming to test whatever was left in this range right here. That's fantastic. And ultimately, we are still kind of bearish, but we should displace to the top side now. So we can basically look for that displacement. So we do have that displacement, and the 5 minutes should basically show us, basically at this point, a nice little entry we can take. So what we're gonna do is, just by looking at this, we can see that price is starting to shift structure, and we're shifting. So what we can do is we can basically set a limit order right here, basically, to look to take that up, and we'll set one more right here, both at 0.5% risk, because we understand that, again, we might be wrong. So what we're gonna do here is overall risk 1 more percent on this overall trade, minus 0.5, minus 0.5, and we're gonna look to take it to the top side. So we're gonna go let that tap in if it wants to. Okay, so that taps in. Does the lower one tap in? No, it does not. That's fine. So now we're gonna instantly get rid of this one, and we're going to break even on this trade right here. So we're gonna lock in this low right here to make sure that we've accounted for some commissions, right? So now we're locked in at break even. Let's see if we hit our 50% first, and this will be our completion right here, right? Same thing basically. See if we hit our partial. So we're just holding that liquidity point. That's fine. Looking to take that partial. Okay, great. So first partial has been fully met. Let's see if our completion target gets met here. There we go. It does actually. Okay, fantastic. So now, so we have BE minus 1%, minus 0.5%, BE minus 0.5%, and here we have 0.5% risk on the trade, right? So now 0.5% risk on the trade overall. What we're gonna do is we're gonna put this down to the partial level, and you can see that that's 1 to 2.35, right? So 4.71, and remember, we're risking 0.5%, right? So we're not risking 1, we're instead really securing 2.355. So in this case, what we're doing is we're securing half of this, right? So this is just how you do our R. So in this case, we're securing 1.17%. So this is a plus 1.17% on that trade right there, right? So that gets us 1.17%. Get rid of that 0.5. And then this right here secures us 1 to 11. So again, we'll have to do the same math. So first of all, we get 11% on that, right? But we're not risking 1%. So it has to be divided by 2 because we're risking 0.5%. And we've already partialed once. So we gain 2.935% on this trade right here. Okay, now we can take a look at that overall addition, right? So what we're going to do is we're going to do the 2.935% plus the 1.17, and that comes out to 4.105. And then instead of just doing 4.10, what we're going to do is we're going to factor the 0.10 as commissions, and we're going to assume that this is a plus 4%. So this is plus 4% overall. We'll get rid of these. Okay, fantastic. Now what we're gonna do is we're gonna zoom back out so we can really see what has surpassed, right? All we're doing is looking to target those liquidity points, and how we're gonna look to target them was using the structure and using, I didn't really go in depth on my own entry criteria, right? So this is very, very basic entry criteria. And as a lot of you in the mentorship know, we go much more in depth into how we confirm these and how we get involved on them and the type of entry criteria we can have. And we are very soon coming out, actually today, with a new video on entry criteria, right? And ultimately, if you guys watch that, it'll be insane. So if you want to be a part of that, feel free to check out the link in the description. Otherwise, enjoy this free video because you can again be profitable using the stuff on here. And again, this is not financial advice, so don't sue me. Thank you very much. So we had our first trade break even. That's fine. Our next trade was -1. So we're at -1% overall. Then we reduced our risk, as you remember, to 0.5%. So we made -0.5 and we made -1.5. Then we broke even again, which is fantastic. Then we took another -0.5. So put us at -2. And then we secured this large trade at again 0.5% risk, which put us up at +4. So overall, on this right here, over the course of 1 week, we were able to secure 2% on a trade, on a week, on one pair, without using any in-depth confirmation, without using any in-depth structure, and just using the idea of where the higher time frame wanted to target, and then using the lower time frame to attempt to target those areas. And as a result, you can see we had a perfect delivery. Now, if you let some run, maybe it continues. I'm not 100% sure. I mean, we can play this out a little bit faster now just to see, right? So yeah, maybe if you let some run, maybe you got some, but you can see that, you know, this is why we target liquidity and why after that, we basically wait for the next move, because clearly we're taking this liquidity here and shifting lower. And then again, you have new entry criteria on lower timeframes that go short, and you begin to capitalize off of these moves here. right? So this is a quick example basically of how risk management in a system and being wrong doesn't really matter if you understand how to stick to your strategy. Remember this trade right here that was up a lot of percentage and we didn't take anything. We allowed that to go to break even. Part of being a profitable trader is allowing your losses to lose and allowing your winners to run. Now, a lot of people say this, but a lot of people don't know what it really means. And the reality is, this is what it means. It means allowing areas like this to not take profit off, but to just let it run and then hit break even. And it's allowing this to just hit the stop. And it's allowing this to then run and partialing properly. And at the same time, as you're losing, reducing the risk you're putting on instead of upping it. This is how you keep your psychology intact. This is how you don't over leverage on positions. This is how you don't revenge trade. And this is how you create a profitable system. And again, remember, I don't specifically trade this exact way. I have much more in-depth refined tools I use. I don't even enter on the 1 hour or the 5 minute. My entries are usually on the 15 and 5 second, as a lot of people in the mentorship have come to start to do as well. But what all of us do, and what some of the most profitable members do, and what the funded members that have become funded do, is focus on their rules and their risk management. This is how you strive to basically trade smart money and to create a system for yourself that you can trust in, believe in, and share with the group if you ever join. So consider joining the group if you'd like to. I'd love to meet you guys. I'd love to talk with you. You get one-on-ones with me. You get time with me. You get to experience the community as is. Otherwise, I hope you guys enjoyed this video. I hope it gave you a little something to work with. And hopefully, I find you guys backtesting on your weekends, during your week. And as I always say, you should never be trading with real money until you've backtested enough. And I know a lot of people say that, you know, demo is bullshit, but the reality is the people that say that are bullshit. Because if you can demo something, you can build the confidence to do something like this and understand why it works, then you're able to go and transfer that skill set. Because the confidence you've built in your ability to do this is the type of confidence you need to then consistently do something on the live charts. So thank you so much for watching, guys. I hope you enjoyed it, and I will see you guys in the next video.